Hey there, so are you a business owner or an entrepreneur and trying to get a mortgage in this hot market and are having trouble? Well, I have some solutions for you. So first and foremost, most business owners or entrepreneurs, freelancers, independent contractors own at least 25% of the business and are not paid traditionally with a paycheck, right? You might get commissions, you might have sales, dividend or interest income, and it's looked at a little differently when you're applying for a home loan rather than a traditional salary borrower. That can cause some challenges in this market when you're getting a home loan. But we have solutions that are called non-QM or a non-qualified mortgage, which means it doesn't fall within Fannie and Freddie guidelines. The guidelines are geared for self-employed individuals or entrepreneurs, and their guidelines are just different. We have some alternative programs rather than supplying the traditional tax return route. So let's dive in and take a look at what those are. One of the most popular solutions right now is what they call a bank statement loan. Traditionally, self-employed individuals have personal bank statements and then they have business bank statements. And you can use either, it just depends on how you structure your business. But what will happen is you're going to supply 12 to 24 months worth of those bank statements. We can talk about which is more beneficial, your personal or your business or some combination thereof. We look at the bank statements. We analyze the deposits from your business in those bank statements, and those get averaged out through a 12-month and a 24-month period, and that now is the income that you get to use for qualifying. Now you have to meet the traditional employment requirements, 2 years being self-employed or as a business owner. Sometimes they will go back 5 years to double check your business license, but those are the standard qualifications with a traditional mortgage, so none of that is any different. Rates, they're a little higher, yes, but the compromise is that if you write off all of your expenses on your tax returns and you have those deposits on your bank statements, now you can qualify for that much more house or what you were really intending for in the first place. The next solution is 1099 income. 1099 income is prevalent in a lot of industries. Uber drivers, real estate agents, restaurant workers. There's a lot of places where people are paid income with a 1099. And a lot of industries, that is the bulk of their income, majority of their income, and then they file their tax returns and write off maybe some expenses and are able to use that income for qualifying. So what you would do, again, it's like a W-2, you submit your 1099s, we don't ask for tax returns, and that is the income that you use for qualifying. Next is the investor cash flow. Sometimes it's called a DSCR. DSCR stands for debt service coverage ratio. Basically, you're using the property as collateral, making sure that the rental payments cover the proposed mortgage going forward, and you don't qualify for anything other than the property qualifies to make the mortgage payment. Super easy, right? It's one of the most popular programs on the market right now, especially for people who aren't able to get a traditional mortgage. They're using this program to get into their first home and then living in it. It's intended for an investor, it's intended as an investment property, but if this is your stepping stone and a way for you to get into that property, it works out great. The next part of that is part two, where if you're building your portfolio, you can only leverage yourself so far, right? At some point, your first property is the hardest because that one you have to prove you could pay for and that you qualify for. After that, your investment properties should cash flow enough and pay for themselves. So when you apply for future mortgages, an investor will look at your file and say, oh, okay, this person has X amount of properties, they paid for themselves, there's money left over at the end of the month, looks good. Where this DSCR investment cash flow loan, you can do that from day one with property one, and there isn't a limit. So in this market, if you're trying to build wealth and you have the money for the down payment, this would be a solution for you. One of our final options for self-employed is what they call an asset qualifier. Many times, wealthy individuals, business owners have a lot of assets, but the way that their income is structured, because they're writing everything off, doesn't look as favorable. So we can use your assets, and they're amortized over a certain period, as a form of income. Very similar to interest income or dividend income. So again, if you have a few $1,000,000 of assets and we look at that and average it out over a certain period of time, that now becomes your monthly income for qualifying to be able to repay the new mortgage that you're obtaining. Again, just another solution for those outside the box situations. So you might be thinking, how do I know if I qualify for any of these, or which one might be best? Well, again, the first part of all of this is that you need to have decent credit, because that's a major factor in all of this and what drives the risk threshold going forward. So our threshold is about 640. So anything above 640, you'll be able to look at any of these options as a self-employed individual. Now, the higher the credit score, the better the interest rate. Most of the programs, I will tell you this, require 20 to 25% down. So these are not geared for first-time home buyers who don't have their down payment. These are geared for people that have the down payment, maybe someone that's been saving up their money. It might be a first-time home buyer, but hasn't been able to get into the market until now. Now we have a solution with a heftier down payment, even as self-employed. If you're self-employed, a business owner, entrepreneur, and you've been trying to get a home and the lenders have been telling you no for income, well, your time is now. With these alternative non-QM programs, it opens up so many doors and opportunities that even myself, after 24 years, haven't even considered. So with that said, my recommendation is get with somebody in your local market, or you can contact me if you'd like. Let's brainstorm, run the numbers, because there are programs out there. There's very few people that can't get financing right now, and most of the times that's for people with lower credit scores. Please don't let that hold you back, because this market is a great opportunity. I'm a firm believer in building wealth with real estate and using leverage and arbitrage to move forward to this market. With interest rates so low, there's plenty of opportunity for you to jump on the bandwagon and become a homeowner and or start building your portfolio. Hi, I'm Aundrea Beach-Greco, your local mortgage expert. I've been lending here in Las Vegas for the last 24 years. It's my passion to help you with your credit, wealth, and finances. If I can be of service, please reach out. Love to chat with you. And in the meantime, if this is the first time you've been at my channel, please make sure you like and subscribe, tap that little bell. I post new content all the time. And if you have friends or family that you think could benefit from my information, please share it with them, because again, without the education and the knowledge in the mortgage market, they may not be exposed to the same information that you have, and it just might be the key to their next property. Have an awesome day.